Okay, we're back, we're back, we're back. Good afternoon, traders and investors. This is JZ De Guzman of Equilist Analytics, and this is our seventh episode of our EquiTalks program. And today is Thursday, March 14, 2019. Are you new in this program? This is the first time that you've heard me speak about the EquiTalks. So let me introduce this one to you very quickly. EquiTalks is a program where I'm discussing one specific stock. I give you my technical analysis, I give you my overall sentiment, and then I share with you my trade setups or recommended plans of actions depending on your situation, regardless if you already have a position in this stock or you're still in the planning stage on whether you will buy the stock or not. Okay? So, by the way, uh, this EquiTalks is produced into three different media. If you're watching this, then this is the EquiTalks video. There is an audio version of this for those who prefer listening instead of watching, and that's called EquiTalks Audio. For those who are not visual learners, for those who are not auditory audio learners, and for those who love to read instead, we have the EquiTalks note for you. Where will you find all of those three media for the exact same discussion? Just head over, visit our website at www.equilyst.com. That's EQUILYST. Okay, .com. And then you click on Learn, then you will find EquiTalks Video, EquiTalks Audio, and then EquiTalks Note. So here they are. For the EquiTalks video, all you have to do is click on the video that you'd like to watch. Now for the EquiTalks audio, they are actually posted or published on in our SoundCloud account, so you can play them here. Currently, we have 6 different tracks already since I was able to produce 6 episodes, and today, as I mentioned, we are already on the 7th episode. Okay, now for the EquiTalks note, this is how it looks like, a text version of the audio and the video version, a transcribed version, so to say. All right, so for today's EquiTalks, in today's 7th episode, I'll be talking about BHI, or Boulevard Holdings Incorporated. Before we head over to the chart of this BHI, let me check first if it has some dividend announcements. So as we see here, there are no new dividend announcements yet for BHI for 2019. Alright, so let's jump to the chart of BHI. As of the time of speaking, and at the moment it's 1:52 in the afternoon, Thursday. Let me refresh the chart. BHI is currently trading at 0.076 per share. It's a red candlestick. And volume, although we're not yet done with today's trading, today's volume is almost, it's almost above the 10-day volume average for BHI. What does that mean to me? Here's how it goes. If I see a red candlestick and the prevailing or the current volume is already above or equal or above the 10-day volume average of the stock, to me that means traders have seen something that catapulted them, that convinced them to join the panic selling or the selling. Let's remove the word panic. They are really convinced to sell their shares for that stock. There's a demand to sell. That's what it only means. Okay. Now, if it's a red candlestick and volume is relatively low, let's say it's below the 50% of the 10-day volume average, then that means traders are just, shrugging it off. Okay, so they're not really they're not having it. It means they just want to snub the downtrend of the downtrend price action for that stock. But in this case, it's a red candlestick and there's a strong demand to sell the stock because today's volume is already like at the brink of crossing above the 10-day volume average. Okay, so That's my interpretation with regard to the price in correlation with its current volume. On the other hand, although it's a red candlestick, the moving averages are still the shorter term moving averages are still hovering the longer term ones. So meaning to say, BHI is still well, bullish in the short term and long term time horizons. But I suggest if you're trading the name, don't just focus on the position of the price relative to the position of the moving averages. Don't just focus on it in terms of making a decision on whether or not you're going to sell. I suggest that you only use the correlation between the position of the price with the position of the moving averages in determining, in identifying, in finding out the overall bearishness or bullishness of the stock, but don't solely focus on it to make a decision on whether or not you will sell. Okay, so what should you do then? Okay, I suggest that you use a trailing stop loss. Okay, you use a trailing stop loss. Once it hits, then you then decide whether you will sell in tranches or you sell everything, all of your BHI shares in one go. Okay, so that's your barometer. That's your selling indicator, trailing stop loss. Another method is by checking the position of the major support, or not necessarily major support. Maybe it could be immediate support or the immediate resistance levels. So where is BHI right now? The immediate support of BHI is positioned near 0.0649. The immediate resistance is positioned near 0.08. Okay, observe this one. When the price drew closer to the resistance near 0.08, selling was entertained. The idea of selling, the idea of profit taking happened when the price drew closer to the resistance. Have you heard of analysts who said that you buy on dips, you buy near support, you sell near resistance levels? So this is one example of that. Okay, so traders bought BHI near this level when it was consolidating, when it was moving in a topsy-turvy manner, close to the support at 0.0649. Let's round it up, 0.065. When BHI was trading near that support level, that's where they entered a new position. And when the price drew closer to the resistance, that's when they decided to lock in some profits. Okay? So by just observing the position of the price relative to the whereabouts of your support and resistance levels, you will already get a clue. You can already peep into the minds of the traders as to what they are thinking. So in other words, the position of the price relative to the support and resistance levels is a mirror of the psychology of the traders, of the people trading the stock. Okay? I hope you get that. Okay? So that's where BHI is right now. Of course, MACD will remain bullish because the price has been going up for the past since when? Since the last week of January, it has been going up. Now, a single red candlestick will not make the MACD line dive below the signal line. Of course, if we would like, meaning to say BHI has to register a few more daily red candlesticks for the MACD line to cross below the signal line. Okay, unless BHI will close below 0.65 today. I think if that happens, we will see MACD moving below the signal line by the end of trading. Okay, so that's not impossible, by the way. That's not impossible. That's still a valid probability. That's why I strongly recommend the usage of a trailing stop loss. Okay, now Um, for the risk level of BHI, it already has a high risk level. How did I know? Its volatility score is already at 89%. But JC, how do you know if it's high, moderate, low, or extremely high by just looking at the volatility score? Specifically by the historical volatility. I've come up with some, a range of measurements for me to identify the risk level of a stock based on my personal studies. So what's that range? What are those ranges? Okay, I'll give you them. Relax. Okay. If volatility score is below 50%, it's a low risk stock. If volatility is 51% to 70, it's a moderate risk level. If volatility score, specifically historical, okay? Because there are two types of volatility, historical and implied volatility. So I'm talking about historical volatility. Okay, going back. If the historical volatility score is between 71 to 100%, it's a high risk level. Anything above 100% is an extremely high risk level. Okay? I hope you took some notes on that. Okay, now let's take a look at the prices or the range, if not ranges, that got the highest number of trades and the biggest volume. Why is it important to talk about or to identify the range that got the biggest number of trades and the biggest volume and the highest number of trades? It is very important for me. Price volume distribution or price volume analysis is so important because this is another way. This is a better way of knowing what traders are thinking about the stock. What do they think about this stock? Are they positioning themselves near the intraday low, near the intraday high, or at the middle, near the VWAP, near the volume weighted average price? Where are they positioning themselves? When I say positioning, I'm referring to whether they are buying or selling. So how would you know? If you would like to buy or sell BHI today, for sure, one of the many questions you'd like to ask me is, JC, where should I buy? Do I buy at any price that I see on the ask spread, the price at the very top, or I should be very conservative and position itself at the cheapest price that I can see on the ask spread? Well, good luck. Okay, so a better way for you to position yourself in a more strategic manner is to identify the ranges, the price points that got the biggest volume and the highest number of trades. Because if a certain price point or if a certain range gets a huge percentage of today's volume and the highest number of trades, there's a high probability for the traders to keep on trading within that range, to keep on positioning their transactions within that range. Okay? So you have to find out where do they flock? Where do they where is their go-to prices? Where is their go-to price points? Okay? Where do they line up? Which price points are so in demand that most people buy or sell within that range. So that's a strategic way of buying and selling. Okay, that is why if you attended some of my workshops, seminars, or if you have read my past EquiTalks video and audio, or if you've read some of my articles, over and over again, I've been writing that the concept of the peso cost averaging is it's a good one. What is peso cost averaging? What is PCA? It's buying regularly at any price. It's buying regularly at any price. I like the definition by 50%. The other 50%, I hate it. Okay, I hate it. Why? I like buying at regular intervals, especially when it comes to long-term investing. But regardless, if we're talking about short-term trading or long-term investing, I do not buy at any price. Okay? take the word any. It doesn't apply to me. Okay. I look for specific price points where the biggest volume and the biggest volume and the highest number of trades are registered. That's where I buy. That's where I position myself, because by doing that, my potential earnings will be could be higher than those who just buy blindly at any price. Okay? For example, why would I buy at 0.08? For example, let's say BHI is doing well today. Let's say we're seeing green numbers, not red. Okay. For example, not because BHI hit 0.08 per share today, it doesn't mean that I should park my buying price there at that price. No, because I see on my price volume distribution analysis that the range between 0.075 and 0.079 get the biggest volume and the highest number of trades. Okay, I highlighted the range on my screen. 0.075 all the way to 0.079, because I see that that's the range that got the biggest volume and the highest number of trades. Then I have filtered the price points that I just need to monitor now. I don't have to monitor everything from the intraday high to the intraday low. Okay? So now, instead of monitoring every single price points, every single fluctuations that happened or that has been happening as trading happens, I have limited it to just how many price points? 1, 2, 3, 4, 5. 5 price points. 0.075 to 0.079. Okay? So that's the price range that I suggest you monitor. Okay? And this price monitoring through price volume distribution analysis applies not only for a stock that's going down. It also applies very much even for stocks that are going up. It does not it is not price direction sensitive, this particular strategy. And I've written nearly 5,000 articles, both on my personal website and on equilist.com, um, giving proof upon proof upon proof, screenshots here, screenshots there, just so you can visually see why it makes more sense to park your buying or selling transactions within the range that got the biggest volume and the highest number of trades than 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 buying or selling at any random price. Okay? All you have to do is search them on my personal website, www.jcdeguzman.com, and there are also a lot of them in equilist.com. So on our website there is a search button on top. So just put in uh, price volume distribution, and you will see lots of stock analysis here, hundreds of them, demonstrating what I've just told you about price volume distribution. Okay, so there you go. I hope you got something from me with regard not just about BHI, but also about some concepts when it comes to buying and selling in a strategic manner. Okay. So I hope you understand why I really don't embrace the definition of PCA or peso cost averaging by 100%. I'm happy with it by 50%. So there you go. We don't buy at any price. That's why another thing, I do not like the buy below price strategy. When you say buy below price, that means if your buy below price is 100, you are technically and literally on your own to decide where you should buy from 99.99 all the way to the lowest possible price that the stock could get. Okay? It's as if it's telling you, okay, it's okay for you to buy at, again, any price for as long as the price is below 100 or whatever the buy below price is. There you go again for the word any. Okay? I just told you why it makes more sense to identify the price range that got the biggest volume and the highest number of trades than buying at, again, any price. Buying or selling at any price. Okay? It's just like here in the Philippines. There's some marketing terminology for this one. When you ask people, where should I go if I would want to have my phone repaired, or if I would like to buy some new phones, most people would tell you go to where? Green Hills, right? If you ask, where should I go if I would like to buy flowers, where will people point you? Dangwa, right? Oh, when people say, it's just like the top of mind. It's the top of mind place. It's the same psychology in marketing applies in trading and investing. Where do people often go? Imagine these price points as places. If these are places like Pampanga, Tarlac, Manila, uh, Ifugao, whatever. So we can see here that most people who want to buy BHI are visiting these places. What are those places? 0.075 all the way to 0.079. See? Marketing psychology also applies in trading psychology. Simple as that. I just forgot the technical term in marketing for that. It's not important. It's knowing the technical term is not as important as knowing the concept behind that term, right? You agree? Okay, like this video if you agree with that, to what I said. Okay. All right, so there you go for my price volume distribution for BHI. Now, what is my overall sentiment on BHI? I am already bearish because for me, the way I read it, traders seem to have already sucked every single possibility for BHI to go higher. They think that the price is already too expensive beyond 0.08. So with that thought in mind, they decided to lock in some profits to take their profits to rake in their profits. Okay. So and with this towering red volume, specifically above the 10-day volume average, BHI traders are really that convinced that it's time to sell. It's time to sell. Maybe not all the way until it hits 0.60, but the prevailing sentiment is that they are willing, they are ready, they are convinced to sell. Okay, so that's how it is. So I am bearish on BHI. As always, sentiments change when things change. Let's see. It's possible that once the price hits again the position where the price where the 10 SMA is positioned, it's possible for the price to bounce away. Okay, that's one possibility. But there's also another possibility for the price to re-challenge, retest the support near 0.065. And when that happens, two possibilities are available. It's either the price will bounce away. Okay, it will bounce away from 0.065, or it will continue the downtrend direction and to retest the next support, which is at 0.05, 0.052. Okay, so that's and take a look. I also want to point out this uh, intersection between the three SMAs. This line here, it's between 0.06. Okay, let me draw a line. It's the intersection between the three SMAs that I'm using. And what are the SMAs that I'm using? You can see them on the left. Okay. I am using. Okay, let's change this one. Why do I have two SMAs here? Okay, let me remove this one. There you go. So I am using 10 SMA, 50 SMA, and 200 SMA. All right. Now, my recommended plan of action for you if you already have a position in BHI, and I do hope you bought BHI when it hits when it was between the range of 0.052 and 0.06. I do hope that's where you bought the stock, because if you did, and if you implemented the trailing stop loss, then congratulations, you should have earned some good profits on BHI. However, if you are one of those newbie traders who bought the stock near near 0.08, condolence. Okay, just kidding. You should still implement a trailing stop loss so that your losses are limited according to the percentage of risk that you can only handle. That's what we call calculated risk. The goal here is not to make you exempted from losses. Okay? The goal is not to make you exempted from losses. Everyone experiences losses at some point. Okay? Even I. Okay? I had so many losses. It's just that what's important is that at the end of the day, at the end of the week, month, year, or your career in trading, you should be a net winner, a net gainer. In other words, it's fine to have some losses. It well, nobody wants to have losses, but it happens. It happens. No matter how data driven your strategy is. Sometimes your data driven analysis is being disrespected by the market. Okay? The market calls the shots. So now, what's important is that you should be a net winner. You should have more wins than losses. That's what matters. Okay? That's what matters. So, to minimize your losses and to limit it according to the percentage of risk that you can only stomach, you should apply the concept of trailing stop loss, of using a trailing stop loss. That's what I teach my clients at Equilist Analytics, the subscribers. I'm referring to them. Okay? We are strong advocates of using a trailing stop loss here. If you don't like the concept of using a trailing stop loss, well, tell me first, how do you manage your risks? You can just be very good at spotting those buy signals, entry points. You should be equally good in identifying your exit points as well. Okay? So you should strike a good balance between those two. Be very good at buying, be equally very good in selling. Okay? It cannot be the other way. It cannot be one-sided goodness, so to speak. Okay? Now, if you don't have BHI yet, what should you do? Buy it now? No, not yet. I suggest that you monitor, wait for the price to pull back, to draw closer to the immediate support at 0.065. Okay? That's my recommendation for you. Alright, so if you have some questions, feel free to comment on our YouTube videos in SoundCloud. Make sure that you follow us on our social media channels, on our YouTube channel. Make sure you click that bell icon so that you will receive notifications every time and as soon as we publish a video. Same thing for our SoundCloud account. Follow us on Facebook, join our Facebook group, follow us on Twitter, Instagram, LinkedIn. We're all over the place and we're doing this every day. Okay? For free. Oh yeah, for free. And if you'd like to get more of what we do, please click on, again, visit www.equilist.com, click on services and then click on subscription. On this page, you will see what you will get when you subscribe to our services. Okay? See it for yourself. And if you would like to know what do other people are saying, are they happy? So happy? Or are they super happy? There's one way to find out. Click on testimonials. There are how many testimonials here? Close to 300 or 400? I don't know. What I'm sure is that there are hundreds of testimonials in here since we released our services in 2014. How many? Okay, 344 customers submitted their testimonials on our website, and with 344 reviews, our average is 4.9 out of 5. Okay, read these testimonials. Read this. Some of them they wrote their full name. Some of them just wrote their initials. Some of them just wrote their first name. Okay, read the testimonials. It's not my obligation to convince you. It's your job to convince yourself on whether you like my style, the way I analyze, the way I simplify it, the way I correlate things. My goal is to simplify everything. We're not in the business of making things so difficult just to make other people think, "Wow, how did he do that? So difficult. How did he do that?" That's not the kind of impression that I would like to create here. The impression that I would like you to have is, how did he simplify that? I thought it was so technical. It sounded so easy when he explained that to me, and now I am able to make some convincing, data-driven decisions on my own. Oh yeah, on your own, because our goal here at Equalist Analytics is to help you trade independently so that you can also invest profitably. Okay? No spoon feeding. We train you here. Okay? So I'm not going to explain one by one what you will get when you subscribe. Just visit the website, and there are bullet points here on what you will get. Okay? All right. So again, my name is JZ De Guzman from Equalist Analytics. This is our seventh EquiTalks episode. Have a good day.